Ladies and gentlemen, welcome to Neometals webinar. This is Trevor Brucato with RB Milestone Group, the US-based investor relations firm. Neometals is listed in Australia on the ASX under the symbol NMT, and in the US on the OTCQX under the symbol NMTAY, which the ADR is quoted under. Joining us today is the company's managing director and CEO, Chris Reed, who will be providing a brief intro on the company, including recent updates on all of Neometals' projects. Following Chris's prepared remarks, we'll be opening up to questions that have been submitted during registration and those submitted live. If you are interested in asking a question, you could submit them in the Zoom Q&A module. Please note this presentation is being recorded today, September 25th, 2024, and will be made available on the company's website at neometals.com.au. Following today's event, the company's investor survey will go live and will be emailed to all registrants and subscribers. The results will develop trends on Neometals' perceived strengths, weaknesses, and milestones, and will be very helpful in strengthening the company's investor communications efforts and guide the focus of upcoming events. So we do appreciate your participation. Please note today's presentation may contain forward-looking statements that are subject to risks and uncertainties that may be out of Neometals' control and should not be construed as a recommendation or a solicitation to buy or sell any security. The company's full disclaimer is on the screen, as you can see here in the presentation, and can also be found on their website. Lastly, RBMG is not a registered investment advisor or broker-dealer. For more information on us, please visit rbmilestone.com. And now it is my pleasure to turn it over to Neometals' Managing Director and CEO, Chris Reed. Chris, the stage is yours.
Thank you very much, Trevor, for that kind introduction. And good morning, ladies and gentlemen. And thank you for taking time to tune into this webinar. It gives me great pleasure to give you an update on Neometals. The title of my presentation was Critical Materials Recovery, or what we like to throw around the office in enabling urban mining. So, in terms of what we actually do, we're commercializing a portfolio of sustainable process technologies that we've developed to recycle and recover critical materials from high-value waste streams. So in the background there, you've got a blueprint design of the plant that we're currently building for Mercedes-Benz. It's an integrated lithium-ion battery recycling plant. We're building that in Germany. The opening of that will be later next month. That really serves as the industrial validation of our technology and as a toll gate to then moving to product readiness for larger commercial scale plants, which we estimate will be ready to be offered to the public in the second half of calendar year 2025. I'll also update you on our Vanadium Recovery project and our lithium refining technology. One of the common threads across all of our technologies is, one, we enable a circular supply chain. We enable the owners of our plants and technologies to satisfy their regulatory and social license obligations. Most importantly, we deliver them sustainable operating cost and ESG advantages. And one of the big things we do is maintain continuous improvement through R&D in our technologies. So the three main business units support the energy transition. And look, the commodities that they are most exposed to are lithium, vanadium, and according to the latest International Energy Agency outlooks, lithium and vanadium are head and shoulders the 1-2 most positively impacted commodities in this net zero transition. So the lithium-ion battery recycling, that is our main undertaking. It's an operating business at the moment, revenue generating, not quite net cash flow positive yet. Essentially, what we're looking to do is build turnkey recycling plants to clients. We don't want to be a merchant recycler. We own half of that technology with a very large German plant builder called SMS Group. In terms of technology readiness, we're in the industrial validation stage. In terms of our customers and targets, we've got Mercedes-Benz, Stelco, and Hitachi. In terms of lithium chemicals, we own that technology 70/30 with Mineral Resources, who are the 5th biggest lithium producer in the world. Our Vanadium Recovery technology, we're looking to commercialize that in a plant up in Finland. We've also got additional feedstocks lined up in Sweden and Germany. And so that project, we've just brought in the European body of the European Union as a new shareholder into that joint venture. We are the dominant shareholder in that. We've completed the pilot and definitive feasibility study, and that is in the financing stage. In terms of a corporate dashboard, look, I mean, battery materials haven't, and the commodity exposure hasn't been a great place to be over the last couple of years. Against our sort of biggest sort of peers in terms of the recycling world being sort of Umicore, we've had a similar run so far this calendar year. We're looking to transition our business next year and get into the commercialization, which we estimate will turn it around. I mean, we're busy building the inherent value in the business, and we expect the current battery materials prices are probably not sustainable in the long term, and we'll see an uptick in those. In terms of the company, we're covered by Euroz Hartleys in Australia, Cavendish and RBC out of London. Market cap about 75 million Australian dollars. 2 years ago, we had $1 billion market cap pre-revenue. We've now got revenue, and we've got a very loyal shareholder base. We've got a small but strong team, very highly experienced executives, and backed by skilled specialists on the board. So we've got myself, Jenny Purdy, who was formerly asset president of Olympic Dam, one of Australia's most valuable mines. Darren Townsend as the head of our vanadium, and recently we brought on CFO and company secretary Chris Kelsall, who's had a long, deep experience in finance. Our independent chairman was former managing partner of Allens in Australia, Doug Ritchie, former head of strategy for Rio Tinto, and Les Guthrie, the former head of BHP Potash. Today, I'll concentrate on Primobius, and where our main business is building world-class lithium-ion battery recycling plants. So, what we do, our products, we've got 4 plants, and depending on whether you are processing production scrap, warranty returns of end of life, you may need discharging stations, dismantling the modules. The common thread is that all of those batteries need to go through what we call a shredding and beneficiation plant. We physically take the casings off. We take out the black mass, the copper and aluminium foils. The black mass, which is the powdered cathode and anode, then goes into a hydrometallurgical refining plant, what we call the hub. So, depending on, what sort of feedstock you're putting in and the source of those feed, we can tailor a solution for end-of-life production scrap or warranty returns. So we're doing that in a business called Primobius. It's an incorporated joint venture with a 150-year-old German plant builder called SMS Group. So, we're primarily responsible for inventing the process and the process flow sheet development, R&D, and SMS Group, like I said, very, very large, privately owned, single family, more than 14,000 employees at over 100 sites around the world, with fabrication facilities in Europe, the US, India, and China. So they can build any plant anywhere, whenever it's required. So we've divided the business up in 2 parts. So Primobius is the plant building arm, separate from the IP holding company, which issues the technology license, so that we actually get 2 different streams of revenue. We make a plant supply margin and a technology license royalty. So that's a bit of a unique business model in the West to maximize market penetration. We've taken a very disciplined, staged process to develop the technology, going from lab, semi-pilot, pilot, demonstration. Now we're in the industrial validation in terms of a 10 ton a day plant for Mercedes-Benz. Like I said, we're building that. We've pretty much completed the front end, the back end, the hydromet hub we're still building. Once we have the final acceptance testing, that will then trigger the product readiness for the shredding spokes, which will be sometime in the first half calendar 25. And then once we have the final acceptance testing for the refining hub, that will trigger product readiness for those commercial scale hubs, or indeed the provision of an entirely integrated operation. So, our aim is to supply plants to customers rather than to compete against them, in terms of delivering them the lowest cost of recycling, which is a new impost. They have to own their plants. I mean, we can provide them a service, of course. We could do joint ventures, but in terms of deploying the most amount of plants in the least amount of time is through plant supply and receiving an upfront margin. It's capital light, lower risk, and then the returns come when the plants start to get into production and become more of a royalty stream based on the products. So Primobius is the front-facing entity to the customers. We work out what they want. We engineer a solution. We then offer SMS the subcontract to build it. We have a margin, and that's how the plant building business Primobius makes money. So we deliver flexible solutions to the customers. We can have a variety of formats. We can have a variety of chemistries. Our main focus is the high value NMC varieties. In terms of satisfying our customers' wants and needs. If they need a service, we have a lithium-ion battery disposal service that we run at Hilkenbach in Germany, where we currently process batteries from the German EV supply chains. In terms of partnership, we have obviously the Mercedes-Benz cooperation agreement, where we're supplying them with their own 10-ton a day integrated plant, entered into a long-term R&D collaboration. But our preferred business model is to plant supply and technology license, and we have a number of licenses issued in various jurisdictions around the world. They're the wants. In terms of what they actually need, one, the EV and cell makers need to satisfy their license to operate, and our main focus is Europe and North America. In Europe, you have the European battery regulations where recycling is mandatory. It's got to be high efficiency. You're going to have minimum recycled content declarations, CO2 footprint declarations. So we can satisfy that license to operate for them. Two, we give them a sustainable competitive advantage against customers that don't recycle. Recycled lithium is significantly cheaper than trying to buy it in spot or under long-term contracts. And because we can recycle the batteries, we absolve them of their carbon footprint, right? So we can strip out 85% of the carbon versus mine materials. And our total addressable market is, one of the most highest growth, highest value waste streams on earth. We all know that the cars are becoming electric. There's the electrification of everything, stationary storage as well. So the annual growth rate, out to 2040 is about 30% compound per annum. So, a fantastic, market, even at the current depressed prices. Recycled lithium is still cheaper than buying spot. Like I said before, this CAGR is driven early on by production scrap. It's little known that during the production process that you can have anywhere from 10 to 30% scrap rates, up the higher end in the early years, and then trending down as they build up experience. And so it's a very, very large market, very fast growing. We're targeting initially in Europe, followed by North America. It's the second largest market they've been the largest importers of cells that have been produced in China for the last 5 years. Someone needs to build the plants, and so we want to be on the cost side of the equation, supplying those plants. In terms of, you know, a very high value waste stream, if we have a look at the value just of the lithium, nickel, and cobalt on sort of long run prices, you're looking at about $7,000 per ton of batteries. So, you know, generally we have a look at these and say, well, a ton of batteries is the same as having a ton of ore that's got 15% nickel, 15% copper, 2% cobalt, and 2% lithium. It's very, very high value. In terms of the technology, like I said, we're in the industrial validation scale. What we've got some photos there of the plant that we're building at Mercedes-Benz. So on that top left photo, that's actually what it looks like at Mercedes-Benz at Kuppenheim, which is west of Stuttgart. One of the limited photos that we can show you on the inside is on the right-hand side. Below that, on the bottom right, is actually what the drawing looks like inside that shed. And on the left there, we've got you know, one of the SMS guys in yellow and the Mercedes team looking very, very, very smart in their uniforms. So that plant, official opening by the German Chancellor, 21 October 2024. We supplied that plant on a fixed price turnkey basis. It's royalty free just for that 2,500 tons per annum. We expect Mercedes-Benz in electrifying their fleet will be needing you know, somewhere between 0.5 and 1 million tons of capacity, probably in about a decade. So, you know, we are looking forward to proving this to them, and you know, we were picked as their global technology partner in 2022. This is the culmination of a number of years of hard work with them, and this is our stepping stone to full-scale commercial exploitation and operation and building of plants. So we've got a fantastic pipeline. You know, as Mercedes operates at steady state, that'll crystallize our business development pipeline. We have issued our first license into North America to Stelco, a steel company of Canada, licensed in North America, exclusive in the field of end-of-life batteries. So we have an option to acquire an equity stake in that recycling joint venture. If we don't exercise that option, we'll revert to a 10% gross revenue royalty, given where the market is and where our market cap is at the moment. That's most likely what we'll defer to. But, you know, fantastic working with Stelco on that. We have non-binding MOUs. We can't name the party in the EU, nor can we name the party in India, but they're two very, very large target markets. We can name one that we entered into last quarter, which is Neomobility in Thailand. Neomobility is half owned by PTT, the national oil producer in Thailand and Thailand's largest company. We've also issued 4 other licenses, all similarly for a 10% net sales royalty. So to put that, you know, into an overhead plan, what we've got here is the 2,500 ton plant for Mercedes. You know, we've given guidance there, commissioning the spoke, installing the hub, steady state, commissioning the hub. You know, that serves as as product readiness for our commercial operations. We expect to be product ready with supplying those, or offering the full scale 50 ton a day spokes, or 20,000 ton per annum, in the first half of 2025, and the hubs in the second half of 2025, and then rolling them out in pretty much a cookie cutter approach. So that's one way to recycle the lithium, and we'll need to do that long run to have sustainable lithium. I mean, in the shorter term, the world does need more lithium. I know it doesn't feel like it where the prices are at the moment. And yes, you know, the Africans have responded with some Chinese stimulus to produce more hard rocks, but you know, the market, they're never straight lines. The trend is up. The highs are higher and the lows are higher for each and every cycle, and we expect that we're going to need a lot more lithium. And you know, 2/3 of the world's lithium is in brine deposits. So we turned our mind a number of years ago to working out how we can get, how to unblock that supply of lithium from brines. Half of it was, trying to find a speedier, more efficient process than evaporating bucket loads of water. That's essentially DLE. That's not what we've got. What we've got is a process that takes that DLE product, or it can even take a salar concentrated brine. And what we can do is produce lithium hydroxide directly from the lithium chloride brine that is recovered, and using electricity as opposed to importing expensive reagents and making expensive reagents. So what we've been able to do in a number of studies have indicated that we can convert that lithium chloride into lithium hydroxide in less than half the traditional price, which is, or half the traditional cost, which is fantastic. And given that we can replace these reagents with electricity, we expect to have a material drop in the carbon footprint. So we've recently completed a long duration 1,000-hour pilot test, and we expect to announce the results of that in the coming quarter. Our vanadium recovery technology, vanadium used to harden steel. It's in all the aerospace titanium alloys, and it's increasingly used as a means of physical storage of electricity in the vanadium redox flow battery, which is what's in that steel container on this slide. So what we're looking to do is to develop the first circular vanadium, or even domestic vanadium production in the EU. So what we did is we developed the technology internally where we can produce high purity vanadium chemicals from vanadium bearing steel byproducts, funnily enough. The iron ores that are mined domestically up in the Nordics have a high degree of vanadium in them, and the methods of producing steel, they produce quite a high vanadium, or a very, very high vanadium bearing byproduct. So what we've been able to do is develop a very environmentally friendly process. We essentially use an alkaline leach captured CO2. We sequester the CO2 in the tailings product, produce a very, very high grade military spec material. We can, in our feasibility study, the operating costs were indicated to be in the lowest quartile. Produce about 9,000 tons of V2O5, or about 5% of global production. We now own 87% of that project. We recently bought the European, an EU body called EIT, which is the European Institute of Technology. They subscribe for money and have options to increase their equity up to 20% at a pre-money valuation of 50 million euros. So our 87% is worth just a little under our market cap. So we're very, very happy to receive equity support from the European Union. The European Investment Bank has approved us for project financing and cornerstone debt financing for the project. We are currently about to kick off the equity selection process for that. So we own that project with Critical Metals, which is an unlisted company of which we're the largest shareholder. We're leasing the land at that port site off the city of Pori. We have a take or pay offtake with Glencore. We have MOUs for additional feed with H2 Green Steel, which is developing a steel project in Sweden, and also Salzgitter Flachstahl, which is a German steel producer. In terms of our Barrambie project, originally we looked at this as a titanium vanadium deposit. It has got one of the highest grade vanadium deposits globally. Second, I believe, only to Rio Tinto's Lacteo deposit up in Quebec. Granted mining lease and approval to start a mining operation and build a processing plant. We've taken that through pre-feasibility and pilot plants. At this stage, we're preparing that VTM, the VTM resources of that project for external sale and recycle the capital back into the business. And we've recently done a gold exploration target to highlight the gold exploration potential, and I'm pleased to say I was wrong. There's a lot more gold prospectivity than I originally thought. So the range is somewhere between 335 and 775,000 ounces of gold. So in the current market, that's a very, very healthy gold exploration target. So in summary, I think we offer a very unique value proposition. We're certainly, driven by delivering our shareholders, of which the board, founders, and management, some of the largest shareholders in the business, the highest return on invested capital. We've got a clear strategy to develop those processing technologies into, very fast growing total addressable markets. We've got fantastic energy and policy tailwinds. You have battery regulations, you have the IRA, you have the Critical Raw Materials Act. I see in the last sort of 48 hours, 14 of the Western economies have signed to create the NATO of critical materials through their EXIM bank. So that's even better for us. All of our technologies are very environmentally friendly. We won the best new technology on the London Stock Exchange in 22. We made the finals of the German National Sustainability Award in 22. Our products give our customers a sustainable competitive advantage over their peers, and that's always, the main moat around our business, and as well as our IP, our granted patents. Industrial validation is the stage where we're at and on the verge of commercialization. So, we're almost through that valley of death as when you're investing into the business. And, like I said, we're earning significant revenues. We're not yet cash positive, but it is, forecast that it will stand on its own 2 feet in the not too distant future. We've got very smart, flexible business models, and we have multiple exposures in that energy transition and the critical materials that are going to be most positively impacted out to 2050. So, Trevor, I'm happy to finish there. Thank you everyone for your attention. I'm happy to field some questions.
Appreciate it, Chris. We'll be opening up to questions here. If you have not already submitted in the registration process, you can submit any new questions in the Q&A module. Let's kick off with some of the questions from the registration. It is related to overall market conditions. Can you elaborate, Chris, on the markets related to Neometals, including the August EV sales, recent China stimulus, and developments in the vanadium space?
Yeah, sure. Look, I think, from the outset, the EU and North American sort of policies are there to support this transition and essentially to backstop a couple of very strategic car making industries. So, there's been sort of mixed press. People like, there's slowdowns, and the prices were very, very high, and China dominates the supply chains. And look, we live with that. But as we look at some of the August data that's coming through, I see GM's EV sales in August are up 70%. The Chinese EV sales were up about 17% month on month. They're off a very, very high base. They're now at about 1 million cars. I think they breached 1 million cars, a month. So we do have to be grateful, one, that, in terms of, and what it's shown us is that the way to success is to integrate, recycle, and scale. And so, there is a pathway for the car makers to survive. And, just the policies just really do revolve around creating a very, very fertile market for recycling. We've gone to such efforts to build the cars. Yes, we've had to import cells until domestic cell production is there. But, recycling creates resilient domestic supply chains. Recycling will give you low cost metals, low carbon. So, I think when we have a look at tariffs, on Chinese cars coming in, that keeps the LFP, which is their predominant cathode, out of the market for longer. I mean, look, there's so many tailwinds. In Europe, they created the European battery regulations to create Fortress Europe. So, you have to recycle, you have to have recycled content. Europe's not blessed with the resources that the US has. The US has tried to, and the IRA there trying to really stimulate the production of those critical raw materials and to make sure you got the supply chains. And you haven't had to mandate federally recycling. I know that some states do mandate recycling. So, all the tailwinds there, and particularly this new pact with all the Exim banks, and that's to not combat China. I don't think they're going to weaponize lithium batteries, but certainly we can learn, and the sooner we integrate and recycle, which obviously you're stimulating the primary production with money, but you've got to be able to capture and recycle it. I mean, we know what happened in lead acid. Once recycled product takes over from primary mined, then you have lower costs, and lower costs of all of those materials is the answer to lower cars and higher penetration rates.
It also creates independence when it comes to this urban mining type of mindset, right?
Yeah,
Establishing this system where you're not necessarily going out and exploring and hoping that there's a discovery and hoping for that process to quickly advance into a production of these
yeah.
critical materials. So it then leads to this other question, which is, what's your view on end of life EV batteries hitting the market from a feedstock perspective, including any insight into scrap rates?
Well, I can tell you it took Panasonic 5 years to get the Nevada Gigafactory below 20%. And Panasonic are one of the best cell makers in the world. And I think, if you have a look at LG's experience in Poland, even the Chinese, I mean, have a look at Northvolt. I mean, it's not easy to make these batteries at high volume. They'll get the scrap rates down over time. So, you know, the majority of the feed at the moment would be production scrap, but we are starting to see the end of life batteries starting to come back. I mean, it's 2024 now. We're starting to see batteries 2014, 2015, 2016. And these batteries, their life is calculated really on the number of cycles. So the less you use it, the longer it'll run, the more you use it. I mean, everyone knows that the only thing more certain than production scrap is is that these batteries wear out every time you use them, right? And that's what they're designed to do. So, that said, there is a need for warranty returns, right? So scrap rate you can estimate statistically. End of life you can model out, 8, 10, 12 years. I mean, to be perfectly honest, I think the lives are getting longer. But what you can't do is forecast those warranty returns and recalls, right? Because the car makers, barring Tesla and perhaps some of the Chinese, they're all first generation EV makers. So we're going to have recalls, and we have had recalls, and we will continue to have recalls. And then you have accidents. So, generally when a car is impacted, it sets off sort of pyrotechnic fuses. It isolates the battery from the car. The battery then just sort of powers its own cooling. But you have to take it out, and you have to and these materials, you've got, what's in the batteries, they're essentially base metals and lithium, right? So you've got lithium, nickel, cobalt, manganese. You can have iron, phosphate, aluminium. They're not really the stuff you want to put into a landfill. So it's much, much safer to recycle them.
Well, let's continue with this. I mean, the Primobius JV, which is a 50-50 split between Neometals and the renowned plant builder SMS, it seems to be a great platform to build the Mercedes-Benz initial battery recycling plant in Germany. But can you touch on what has been established already, the relationships that have continued to grow, your diversification geographically speaking,
Yeah.
on future plants, future opportunities?
Yeah, well, look, we want to offer them around the globe wherever they're needed. Um, in terms of, you know, the big immediate targets. I mean, China is not somewhere we're comfortable penetrating unless invited. Um, and so, Europe is ahead of the US in terms of its EV fleet penetration rates, their production. The US will catch up and exceed Europe, of that I'm certain. India, second biggest geographic market in the world. And you've got to remember there's a lot of lithium in these phones. The Apple batteries are 20% by weight cobalt. There's an awful lot of consumer electronics that have got lithium batteries as well. Um, so, you know, for us, Asia, ex-China, Europe, North America would be our key markets. In terms of the business development pipeline, you've got Mercedes, ploughing the way through the seas, and then you've got we've got licensees that are public, we've got MOUs that are public, we've got non-public MOUs. They're non-binding, so you don't have to disclose them. And so as Mercedes works and we get to the product readiness for the commercial scales, all I can say is we're currently engineering solutions for a number of potential customers, right? And we expect that, when you go back and have a look at those graphs, we're coming off a low base, but I mean it's steep. If you have a look at it was 30% globally, the CAGR, but if you sort of zoomed in on North America and Europe, they were about 37 and 38% CAGR, which is incredible. So on those on the rule of seven, you're looking at the market doubling every 2 years. And so then you got to look at, well, okay, and there's other recyclers, but who's going to build the plants? Because these car makers are going to get cars back. As they become integrated and become cell producers, they're going to have their own production scrap. Now, you can't, our ambitions and the size of that market for the highest penetration rate, it's really about having like not a homogeneous design, but we've got a core base design that we can tailor, make minor adjustments to suit whatever the customer. Some have slightly different formats. Some are cylindrical, like that. Some are pouch cells. Some are production scrap. Some are packs. Some are modules. So having that flexibility, in the design, but we have a core hydromet flow sheet and patents around that, and that enables us to take a cookie cutter approach. So we could be building a plant out of SMS Hilkenbach in Germany. We could be building one out of the US. We could be building out of India. We could be building out of China. They're sort of modular. So for us, the critical ingredient why we partnered with SMS is we've got a fantastic solution, but we want to sell those plants. We want to make our margins on the plant supply. We're early adopters. We started in recycling 2016, 2017. For us, the critical ingredient is who's going to build these plants? Like these car makers they don't have time to try to, they've got enough issues trying to make EVs and get supply chains. They don't have time to develop recycling solutions, and with respect to Mercedes-Benz and targeting Europe and then Germany first, these guys want to pick up a phone and speak German to a German in Germany and get a custom made plant, right? So, I mean, it's an Australian design engineered and delivered by the Germans. I think it's a best of both worlds solution for us.
Agree, Chris. And maybe we could take a step back a little bit here, real quick, on the technology. This platform that you guys have built with SMS, Primobius, maybe you could talk about a little bit about the feedstock. There's not every battery is the same. We all understand
Yeah.
that, but is there, maybe you can talk about the other applications that can be possibly used. Maybe is there a company outside of the EV battery space that can be formed, and is there any sort of let's just say hurdle to build a custom type of plant for perhaps that specific type of feedstock or new application outside of batteries?
So no, look, I think, in terms of the formats, there's generally just a couple of accepted formats, right? So you sort of have pouch, prismatic, and cylindrical would be, you know, pretty much cover 99.9% of the market. In terms of the cathode chemistries, you can have, NMC 111, 523, 622, 811, NCMA, lithium nickel LNO, LMO, LCO, lithium cobaltate, which is the predominant cathode chemistry in the consumer electronics. And we're sort of focused on that. LFP is really been dominated by the Chinese. The patents from the original developers sort of were expiring in 2022. They picked that as their sort of national cathode because it's cheap. The lithium, you've got lithium, iron, and phosphate. The iron and phosphate's cheap as chips. The lithium's a bit more expensive. So China as a nation has that. It's less energy dense, so less range for a given volume, and that's a fast growing part of the market. But we've got to see how many actually get sold and get deployed into the West. We're certainly looking at certainly the front parts of our plant work. The hydromet process, you could process the batteries, but you would lose money because only the lithium is really worth recovering, not the iron and phosphate. So, do they do LFP recycling? Sure. It's profitable if the lithium price is high enough. It'd have to be significantly higher than sort of where it is now. I would hesitate to guess it's probably about 25,000 a ton. You could make money recycling LFP, but for us, the next format that we would look at would be sort of solid state lithium batteries. Which is good because, if they've got twice the range, they've got twice the lithium in it. I mean, lithium is the non-substitutable element. It carries the electrons. So you can change anode chemistries, cathode chemistries, but the common thread amongst all of them is lithium. And, we've been in lithium since 2009 and obviously developed Mount Marion with Minres and Ganfeng. So, we've got a pretty long pedigree in lithium.
Well, it just speaks to the longevity of Primobius and the importance of the platform that you've built to meet the demands and even the feedstock that continues to come out here for decades. So the
Yeah.
longevity, I think, is the important takeaway that you guys have established with Primobius. Talking about the share price and the valuation, I mean, you were saying before that the company was about $1 billion in valuation, pre-revenue, pre these advancements. This has obviously there's been a lot of de-risking factors since
Yeah.
then. This has been tied to the lithium price, EV sales and so on. You talked about it a little bit already, but maybe you can talk more about and dig a little deeper on the diversification of your portfolio that perhaps should be beneficial for investors to understand.
Yeah, certainly. Look, I think, when we were developing that technology, the sort of market took a view that, we were going to be a merchant sort of recycler, not integrated, literally, what we saw with, some of the American companies, Lysical and the like. And, therefore your economic fortunes are very, very highly driven by those commodity prices. And, in 2022, they were unsustainably high. We worked out that they were driven by the Chinese stockpiling lithium and building up a national strategic stockpile of LFP cathode chemistry, which is great in hindsight. And look, we've always had a reasonably strong correlation with lithium, but the business model, like in two parts, the upfront margins is really exploiting the size of the market, right? In terms of you absolutely know that there's arisings coming out of production, scrap, and end of life and warranty returns. They need to be recycled. It's compulsory. So hence you have to recycle. So you either pay someone to recycle, and we get paid in Germany by the EV supply chain there, and it's a great business. The merchant recyclers in the US buy batteries. We didn't want to get into that, so I think misunderstood there. So the actual model, we've taken a low capital, low risk model. So upfront plant building, that's our main business. The technology where we're able to issue technology licenses, particularly around the refining hub. We've got to prove that the technology is worth it. Yes, we actually turn recycling from a cost center into a profit center. We take a share of that in the royalty streams. And so if you've got any royalty stream, it is totally driven by the commodity price, right? Because you're only linked to the revenue. So you've got a perfect correlation with the commodity prices. So the technology licensing part is in an Australian holding company, and the plant building company is a German company. And, if you had a look and, we got valuations done in 2022, the royalty company, the tech holding company that with the royalties was probably 2/3 or 3/4 of the value of the overall business. Now it's the other way around because the commodity prices have come down to sort of, nickel, it's not really a sustainable nickel and cobalt price. And lithium down where it is now is, far from an incentive price. So I can see in 2022 good fun. The shares are nearly $2. The market cap's over $1 billion. But the inherent value is less than your market cap. Whereas I look at it today and we've substantially de-risked it. We are generating revenues. We're on the verge of commercialization. We've got 5 licenses issued. We've got 4 MOUs. So I can see us, if you rolled all those, you'd be building plants for a fair while, right?
Now that's just
So
on one.
I'm not worried about the inherent value. I think the market cap is just not reflective of the inherent value of the company.
That's one of your businesses, and talking about the diversification, maybe you can speak to the EU, the European Union's participation and the other aspects of your
Yeah.
business that can diversify a shareholder risk, if you will.
Sure. And so, the Vanadium project, you've had the European Union subscribe for new capital and take options at a 50 million euro pre-market valuation, right? So 87% was, the look-through valuation was larger than our market cap was yesterday. So, there's value there. I'm not saying how much it is. The market's clearly discounted it, but what I can say is that Europe has no domestic production of mined vanadium. It is entirely reliant on processing imported and Russian products. That's not where they want to be long term. And the tailwinds both from it would be the most fertile setting to develop a project, Finland. The state, local, and federal governments are a pleasure to do business with. They are very, very supportive, from land leases, capital subsidies, investment tax credit. You know, the certainty around environmental approvals, you know, the EU through the EIB providing cornerstone debt financing, the equity. I mean, you know, it's something that we're not used to down under. You know, the government doesn't throw around money around the mining industry. We used to throw a lot of money at the car industry, but we no longer have a domestic car industry. You know, that's one diversification. The titanium vanadium, you know, like I said, you know, we're actively working on divesting that and recycling the capital. We've had a look, you know, Barrambie originally at the turn of last century was a gold town. You know, in the current gold price environment, we thought, well, if you're looking to divest it, we better have a look at and see how much gold might be there. And, you know, I got to say, we're pleasantly surprised. I mean, you have a look at the upper and lower boundaries of that contain value, you know, yeah, there's a lot of gold there. So, you know, I think there's multiple sources of value. The Elite technology, you know, we're seeing a lot of traction in DLE. A lot of those projects now getting funded in the US. You know, Anson, Standard Lithium, E3 Lithium, you know, Lithium Americas, you know, Argentina's looks like it's a much more stable jurisdiction, and they're sitting on quite a lot of lithium brines. Chile might be moving a little bit to the right from being firmly to the left. You know, and even Bolivia has been doing deals and trying to get more lithium. So, you know, that technology that can utilize electricity, and particularly renewable electricity, because up at these salars, you know, there's not a lot of clouds, a lot of cheap solar energy to be captured there. So, you know, I think we've got that diversified sort of structure has worked. Sometimes it's a little complex for the analysts, but it's a bit like being an investor. You know, I think, you know, we're managing this business for the long term. I've been here 22 years. I'm not planning to go anywhere.
It's a diversified platform. Sure, you know, one might think that, you know, you're spreading yourself thin, but it's not just the Chris Reed show. As much as you're the man, you know, it is important for investors to understand that you do have a dedicated team for these businesses, and the efficiencies are there. So the team and the strategic partners that you've built relationships with are going to enable the businesses to remain fairly capital light, and advance quickly, and hopefully unlock value here for shareholders. So I thought that would be important
Yeah.
for investors to understand. And,
Yeah.
and if you have any
And look,
additional comments on that.
we've had, you know, history of when we've made money to give it back to the shareholders. You know, we've given
Spot
more
on.
than 82 million back in dividends and buybacks and capital returns when we've had the money. We've done one raising in the last 13 years. So, you know, we've been pretty shareholder friendly.
Chris, appreciate it. Let's wrap it up there. I'm going to put the ball
Thank
back
you
in
very
your
much, Trevor.
court. You know, if
I
there's
can go to
any
bed.
if there are any final comments that you have on, you know, steps forward, timeline that investors can look forward to, I think that'd be great.
Excellent. Yeah, I think, look, we have an EGM, so the presentation would be up on the platform, you know, Monday next week.
Got it.
All right.
So on a
Thank you very
timeline.
much, everyone.
All right. All right. So we'll wrap it up there. If you have any questions, feel free to email us at neometals@rbmilestone.com. We'll be sending around the survey for your feedback. The presentation, including the timeline on the upcoming milestones, are in there. If you have, again, any questions, neometals@rbmilestone.com. That concludes today's event. Thank you all for joining, and you are now free to disconnect.
Thank you. See ya.
Take care, everyone.